sort of talk about price action, what we've been seeing. And obviously, it's been a great year for gold. This time last year, Josh, as you know, we were looking at what, 21,
Around 2000, yeah, a little over 2000 in the beginning of the year, yeah.
and that was overhead resistance for gold for 4 years. So from 2020, after the COVID lockdowns and the kind of rush that we saw into gold and silver, gold couldn't get above that $2,100 range up until early 2024. So this time last year is $2,100, and then it broke out and has made new all-time highs pretty much all year. This chart that we're showing here, this is kind of a shorter term view. It's just the last, call it 8 months or so, but you can see what sort of happened with gold leading up to the election. It made a new all-time high at the end of October at around $2,800. And then, of course, with the fantastic victory of President Trump, what happened is the dollar, the US dollar, shot up like a hockey stick on the charts. So the dollar was strengthening relative to all other currencies globally because of a lot of the policies that he's been championing and we're seeing implemented now. But what we saw after the October high at 2,800 was a pretty sharp pullback. But what we've got here, this pattern, this sort of triangular wedge, we never negated the bull market. We held on to that lower line, which is known as support. So that trend support stayed intact. We touched it a couple times, mid-November, mid-December, and pretty much since the start of 2025, Josh, we've just been making new all-time highs pretty much every week. So we got over that $2,800 mark just a couple weeks ago, and now we're sitting at 2,900. So this is just a short-term chart of gold. We do know that lots of analysts are calling for much higher prices this year over the next 12 months, some as high as 4,000. Most are kind of ranging between the 3,400 to 3,500. But yeah, gold is just doing its job. It's hedging against inflation, hedging against uncertainty. And this is still, in my opinion, early innings for this precious metal bull market that we're in. It should last 5 or 10 years. Yeah, we're a few years into it. We got a lot of runway left. Do you have any comments about the price action on gold and what we're seeing?
Yeah, I mean, it's pretty rare that we see the dollar essentially at an all-time high and gold at an all-time high. So this is something that, I've been in the industry for 15 years and I've never seen it this way before. I can remember vividly back in 2008 to 2011, the last time gold hit its all-time high of $2,000, the US dollar index reached a low of 75. And right now we're about 108 on the US dollar index with gold at 2,900, right? Yeah. So with this being said, if we see the dollar fall dramatically, we could very easily see gold and silver rise exponentially, right?
That's a really, really fair point. So they're not positively correlated or negatively correlated. They don't move perfectly in tandem, meaning when the dollar is up, the metals are down, or vice versa. Normally, the relationship does work that way, but what we've seen, again, very unique, the dollar making new highs, gold making new highs, but what happens to gold when the dollar rolls over here? And there are a lot of analysts looking at the dollar saying, quite possible that we see a kind of a yearly high. We get into that 115 to 116 range. But then there's also kind of a level around 106 that if it breaks down below that, we probably get to 100 and then could see ourselves in the 90s. So if the US dollar is breaking down relative to other currencies, you can expect the price of gold in US dollars to only surge. But a higher dollar doesn't actually mean that gold can't go higher. And clearly the last few months have been proving that.
That's exactly right.
Yeah, great. Gold, anything else to really add there, Josh, just with what we're seeing and maybe?
Yeah, I really kind of wanted to take some time to go over the gold to silver ratio. This is something that I follow pretty much on a daily basis. As a gold and silver investor, you should probably be looking at it as well. So this is how many ounces of silver buys you 1 ounce of gold. Okay. And the reason why this is important is you can kind of see historically relative to gold, if silver is undervalued, overvalued. And historically, so for 1776 to 1933, it was pegged at 20 to 1. So 20 ounces of 20 ounces of silver buys you 1 ounce of gold. Yeah. Okay. And it was like that for hundreds of years. And today we're pushing 90 to 1. Okay. And the highest it's ever been is about 120 to 1 during the height of Corona. through the first couple months of Corona.
Very briefly.
We saw it get all the way up to 120. So what it means, the long and the short of it means is that silver has essentially never been cheaper priced in gold for the last 5,000 years, right? I mean, you're getting as many ounces of silver as you possibly can during the last 3,000 years, right? So if you take that, to me, that is a very, very bullish sign for silver. It means that the sentiment on silver has been lagging. It's kind of been a laggard, right? I mean, I thought once we see $3,000 gold, I thought we would see $50 silver. And a lot of other analysts and economists were expecting that. And we haven't seen that, right? Silver is holding on at about 32, well above its resistance level of about 30.
Yeah.
Which is nice to see, but I think we should see that silver to gold ratio closer to 40 to 50 to 1.
Yeah. I agree with you there. I actually think that longer term will probably take out the low, which was from the aftermath of 2008. Yeah. So we got to a 30 to 1 ratio in 2011, but let's just take one step back. In 2007, stock market at all-time highs, gold at all-time highs, eerily similar to what we're seeing now. And I actually think it's a bit of a foreboding element where gold shouldn't be doing as well as it is, and it shouldn't be making all-time highs while alongside the stock market, unless there's a very tangible kind of economic uncertainty across the globe. And we can look at other charts, like with China, for example, and then pouring in to gold. But we saw that gold made new all-time highs alongside the stock market prior to 2008. When 2008 hit, the stock market crashed by 50%. Well, in the 3 years after, gold tripled, but silver 8.5 times. So that's what got the ratio down to a 30 to 1 price ratio. Right now we're at a 90 to 1. So what I've been saying is, with the possibility of a coming recession and a very significant market crash, we could see a drop in the gold to silver ratio and the outperformance of silver versus gold, getting us at least back to that 30 to 1 2011 low. That would mean that if you had the same amount of money, Josh, and you bought 90 ounces of silver versus that 1 ounce of gold, price being the same, if you held those 90 ounces of silver for the next, call it 3 to 5 years, and we return to that 30 to 1 on the gold to silver ratio, your 90 ounces are now going to yield you 3 ounces of gold if you sold them.
That's correct.
So the same amount of money being equal, it's better placed now in silver at these historic lows or these historic undervaluations, and we're likely to see a lot of great outperformance in silver from here on forward. Yeah,
that's right.
For sure.
That's right. And we don't want to leave out platinum too. This is something that has been gaining a lot of attention as well. I'm hearing a lot of enthusiasm with investors. So when I got into the gold business, the price of platinum was double the price of gold. Okay. Right now, the price of platinum is about a third of the price of gold. So 15 years ago or so, you could buy 2 ounces of gold for 1 ounce of platinum. And right now you can buy 3 ounces of platinum for 1 ounce of gold. So everything is askew right now. And platinum, a lot of people don't realize, is actually 10 to 20 times rarer than gold on this planet. There's 10 to 20 times more gold on this planet than there is platinum. There's no reason why it should be selling at such a huge discount to gold.
That's right. Yeah. And what I like to kind of remind people of, and they see this all over the place, when you go to a service-based business, Josh, car wash, salon, you've got packages, the platinum package, the gold package, the silver package, the bronze. And platinum is always the best because it was always the most expensive metal up until about 2009. And like you said, at its peak, it was 2.5 times more valuable than gold. Well, right now it's $1,000 with gold approaching 3,000. It's just unbelievably cheap. Now, mind you, it doesn't have the history of gold and silver of being a monetary metal, right? It has not played a role in our currency like gold and silver have, but it is extremely rare. It is a precious metal, but it's used primarily industrially. Now we know it's got a lot of great applications, especially with respect to nuclear energy and those types of things with fission reactors. So demand's not going away. Supply is extremely hard to find. The price right now makes no sense. And so, just in speaking of value, buy what's cheap, not what's expensive. There's certainly a big value play for platinum with our clients right now as well.
That's exactly right. Yeah, and one of the reasons why we didn't see platinum as a monetary metal is because we didn't have the technology at the time. So platinum has a melting point almost double that of gold. So
Hmm.
you have to heat it up temperature-wise twice as much to be able to melt it and refine it and assay it. So that's part of the reason why you don't see a whole lot of platinum coins out there, platinum bars out there. To manufacture platinum, to assay it, to refine it, to mint it into coins and bars is very costly. And there's not a lot of mines that have the availability to do it. Right?
Hmm.
100 years ago, you couldn't platinum. 150 years ago, I should say, platinum didn't exist because we didn't have the technology to get the temperature that high. So platinum
Interesting.
has really, really, a lot of people hear about it in the jewelry industry with designer jewelry and whatnot. A lot of ladies have their wedding rings made in platinum,
Mhm.
and I am extremely bullish on platinum.
Yeah, me too. Yeah, I would think, and this is speculation, we don't have crystal balls, but I would think that over the next few years, as we kind of come into a what's actually generally a commodity bull market, it's not just gold and silver that are going up. Actually, a lot of commodities are going to perform well in
Yes.
an inflationary environment. And I think the rarer the commodity, the better it'll do. Maybe not right away, but again, with kind of a longer term horizon, which we recommend to our clients anyway. Gold and silver are not a trade, especially not physical bullion. This is a longer term buy and hold.
Yes.
But I would think that platinum will at least get back to par with gold at some point in time, which from here means, tripling.
A 300%
Um,
gain. Yeah,
so, time will tell, but it's dirt cheap right now.
that's right.
So, Josh, anything on the metals that you'd like to cover that we didn't talk, or maybe we switch over
Something
to
that
markets?
it's correlated here. I just read an article about Trump stopping the making of the penny. Okay.
Yeah.
I guess in the US here, it cost us about 2 cents to make every penny. And something interesting about the penny is if you have, a penny used to be made out of copper, right? 95% copper. And
Hmm.
that was 1986 and earlier, which is actually worth about 3 to 4 cents today for a
Hmm.
copper penny, right? So if you
Interesting.
have a penny from 1986 or earlier, you can triple your money by just putting it in your safe, right? Because it's worth 3 to 4 cents today. So Trump is stopping the production of the penny because we're losing tens, hundreds of millions of dollars making these pennies. And it's something that we could see with other coins too, right? What if the nickel? What if it's costing us 7 cents to make a nickel? I mean, they've taken all of the actual base metal out of these coins. They're all copper clad. They're all nickel clad. They don't have any real valuable metal in them, right? If you
Hmm.
take an old quarter and a new quarter, 1967 or 1964 quarter, that's worth about $4 or $5 today, or a 1965 quarter that's still worth a quarter,
Right.
right? Because
Right.
it
Well,
doesn't have
just
that
like
90% of silver in it.
Yep, exactly. Old coinage used to be 90% silver. It's funny how they're making that move. I think it obviously makes economic sense. It's something actually that the government of Canada did about 10 years ago.
Yes.
So they abolished the penny about 10 years ago for the same reasons, right? It just cost them 2 to 3 times more to make than it actually was worth. So, let's actually maybe talk about, just in that context, some of the other interesting stuff that's coming out of the Trump administration. He's really just guns a blazing. 3 weeks in, we've seen more work from this guy in these 3 weeks than probably the whole 4 years that Biden was there. This breakneck pace is lovely to see. I think he's going to continue that. I think the strategy is actually to keep Democrats basically on their toes. They don't even know what to be mad about, because before they can say something about the current issue at hand, they're on to the next. And
Yes.
so I actually think it's a brilliant strategy, communications and otherwise, to just hammer out everything that he promised that he would do. But one of the larger, kind of more, let's say, potentially economically uh, volatile topics have been tariffs. And as you know, tariffs could potentially impact the precious metal space. And what we've seen over the last few weeks, kind of in anticipation of 25% tariffs on Mexico and Canada, is that these borrowing rates, or these lease rates to be able to get metal out of the commodity exchanges. There's one major commodity exchange in London, there's one in New York. So the amount of metal that's been flying out of London to come home into the US prior to the tariffs being enacted is just off the charts. So we've seen, the lease rates basically quadruple in the last couple of weeks. There are some bigger implications for these tariffs as bullion dealers, as precious metals investors, because what that means is, with the amount of silver, especially that comes into the U.S. from both Canada and Mexico, Mexico being the biggest silver producer in the world, there could be carve outs for gold and silver just across the board. We may have nothing to worry about, but obviously, global markets are positioning for them to be included in that. What that would mean is bringing in a Royal Canadian maple coin, right? Beautiful silver coin. I love selling them. But if all of a sudden bringing them in from the Royal Mint costs an additional 25%, that adds $7 to the price of silver.
And we've already seen that, right? We've already seen just in our day-to-day business, the price of the Canadian silver maple leaves now are more than the silver eagles.
Yeah.
Which is the first I've never seen this before in the industry,
Never.
right? Especially in America here, we're partial towards the American silver eagles, right? A lot of Americans don't want a coin with a king or queen on it. That's especially in America here, right? That's very, very popular.
Exactly.
So a lot of people stick with the 1 ounce rounds or the American silver eagles. Those are the two most popular 1 ounce silver coins that we offer here.
Right. And what I think that does kind of inadvertently, Josh, like you said, is, there's already an appetite for American made silver buffalo rounds, American eagles. We've got a lot of domestic bullion product. But if we're going to see any silver in general that's coming from ore that was made and pulled out of the ground in Mexico, that could have an across the board price increase for all silver products. But we will probably see a depletion of domestically produced bullion, kind of get it while you can type of thing. So again, there could be carve outs. We don't know the details of what will exactly be impacted by these tariffs. They've been delayed, I think, now for another month or so, or 3.5 weeks at this point. But obviously markets are beginning to get a little bit nervous. And, I think that it's time to act, right? Don't wait for these to come in and to kind of slap gold and silver in the face. Get your gold and silver now while prices are still, especially in the case of silver, like we talked about, extremely cheap.
Yeah, that's exactly. I mean, we could see overnight a 25% increase in the cost of these coins and bars coming from Mexico and coming from Canada.
That would add $400 to the price of silver.
Yeah.
Right away. Right, it'd add $7
to the price of gold, right? And then $7 to the price of silver.
Pardon me, yeah.
Overnight,
exactly.
Overnight, right? I mean, you could, and that's what we're starting to see now. Before the tariffs take into effect, before all of this comes to fruition, we're seeing the market change dramatically, right? We're noticing the premiums on metals. Like right now, I have never seen the premiums on gold and silver as low as they are now, right? So during the height of the coronavirus, we saw the mine shut down. We saw the mint shut down. They were not producing gold and silver coins or rounds.
Yeah.
Right. And the demand was surging. The retail demand was surging during that time. So we saw shortages in silver and gold. We saw high premiums. We saw the silver eagle premium get up to all the way about $18 over the spot price during that time. And it was a mania. And you couldn't get it, right? No matter what you wanted to pay for it, you couldn't get it on hand. And we experienced that here at Noble, right? It was for a year and a half. It was tough to get your hands on metals on any large quantities.
Yeah. Yeah. And what I say to clients is, you call me now and it's, what do you want? I've got it all. But if you're waiting for something to happen, some type of crisis that kind of drives all of this buying FOMO to us, at that point, it could be a conversation about like, well, here's what I got, not what do you want? I'd really prefer for clients to be able to have, all of our inventory mostly in stock, which is exactly, we are seeing fluctuations in premiums day to day and week to week, just because the industry is now trying to figure out what's going on and what direction, these tariffs are going to be in. But
and we've seen retail demand fall off a bit, but
in the West,
in the West, at least, so it's a very good point. In the West, we've seen some retail demand fall off. We've seen premiums come down, but you look at the big institutional buying, you look at the central banks, other countries, they're buying gold in record amounts.
Absolutely. Okay. Yep. And just to kind of add to that, Josh, China in particular cannot get enough precious metal, gold and silver both. And you have to think the context is a little bit different from us. So we've got housing market at all-time highs, stock market at all-time highs. But China, conversely, is in a massive stock market crash and housing market crash. So they're kind of in the middle of an '08 type correction. So the only game in town as a Chinese investor, the only protection for your wealth are physical gold and silver. And from brick and mortar kind of retail shops, I'm seeing news articles and stuff every day. They cannot keep it in stock. The Shanghai Bullion Exchange or Gold Exchange, the Chinese government just allowed Chinese insurance companies to start buying, and they're now kind of mixing into the market. Look at this chart here, which just shows that trading activity in general for gold is at all-time highs, unprecedented levels, and it has no signs of slowing down. And so they think that we're kind of crazy. There are more sellers than buyers right now in America, or in, again, the Western retail markets. We're at all-time highs. Silver's done pretty well. Both metals have returned over 40% in the last 12 months. But that shouldn't be a reason to sell. That should be a reason to hold. And frankly, the trajectory we're on is going to be a lot higher for both gold and silver. So China's gobbling it up. They can't get enough. They have an insatiable appetite. They're a much larger country than we are. And we're almost in this kind of complacent mode where, again, stock market's at pretty much all-time highs, the housing market's at all-time highs. And unfortunately, with investor sentiment in general, is people don't really act until there's a reason to. So I urge all my clients and all of our listeners to kind of take a proactive approach. If your 401k or IRA have never been larger than they are now, or based on your Q4 2024 statement at the end of December, that's pretty much where everyone's at. They're happy with that. I think that's great, but it is time to crystallize some of your wealth and to take some chips off the table and start your allocation to gold and silver. We've got a term that Colin uses that I love, which is, it's a value lock. You're never going to lose purchasing power on any amount of money that you take from your portfolio and put into gold and silver. You can't, not over the long haul. Sure, it ebbs and flows like any market, day to day, month to month. But our clients should consider that we have all-time highs in housing, all-time highs in the stock market. We've never had better times, but we are seeing recessionary indicators flash across the board. And I noted earlier, gold's doing similar things now that it did in 2007 before the global financial crisis. So let's not wait for a 20, 30%. And that's just a garden variety correction. We could easily see one of those in 2025, Josh. But with valuations where they are, you can't rule out a 50% or more, like a 2008 or even the 2000 .com bubble.